What's up, everyone? This is John Shaw at Next Level Success. Today we're going to be talking about 5 mistakes to avoid when investing in stocks. So before we jump right into this video, all I wanted to say is I've made my fair share of mistakes, but along the way I made a lot of good things too. So you want to find a balance of the pros and cons, and if you have way too many cons, well, maybe you should consider something else. If it's completely taken away and just draining you of your energy and bringing everyone around you down because you're negative, well, maybe that's not really a good thing. But let me just say a couple things about all the positive things I've done since I've started this. So I've done a lot of mistakes, but one thing I have done successfully is I've successfully invested in stocks. With no mentor, I've invested in stocks, and in only 1 year's time before this whole situation has happened around the world that we're all so familiar with, I was $30,000 on top. So that's a pretty big amount of money to be ahead. But then this whole global economic slowdown happened, and well, now I'm just waiting until the economy recovers and the market recovers. So trying to look for that low point, waiting for it to bottom out, paying real close attention to the numbers, and when it does bottom out, I'm going to make sure to not miss out. And then I am confident that as long as I stick with it, now that I'm starting to learn what I'm doing and I don't give up, without a doubt, I'll come out on top. Along with that, I've successfully started an online business and I've successfully launched a merch company. So a lot of pros that has come with the cons, but enough said. Let's just get right into the mistakes to avoid. So, emotions. One thing you want to avoid is your emotions. Letting your emotions get the best of you. Sometimes you go and you panic. And then if you did your research, you did the proper research, then don't let your emotions get the best of you if you see it go down. Because if you go and you start to think the worst, oh, what if it continues to go down? What if I'm going to go and lose this money I worked so hard for? Well, then you can't think like that, because then all of a sudden your mind starts thinking in an irrational kind of way. And that's what I did when I first started investing in stocks. I was trying to do the whole buying and selling thing, day trading. And when you're just starting in the market, you want to avoid day trading. That's just my experience. That's my advice to you guys. Unless you've really done your research and you've tracked patterns and you've watched the experts, and even the experts say they've had a whole entire 2 years trying to learn the patterns, and they'll tell you to avoid those emotions, because even when a stock did 6 out of 7 criterias of a certain pattern, because patterns tend to reoccur when it comes to stocks, and they jumped into it, well, then they would lose, and then that's when the emotions would kick in and it would start this whole buying and selling thing. So you want to try to avoid those emotions. That is the hardest part. Number one, hardest thing I've had to do when investing in stocks. Hold long term. That's my advice when you're just investing in stocks. Changing strategy. So you don't want to go and short term, long term, short term, long term. So if I would have went long term right out of the gate, just like I had originally thought and I'd originally read in the books and watched the experts like Warren Buffett, which I think still maintains the 4th richest person in the world, through stocks, he just suggested to stay long term. So I went long term, and I was looking to invest in Apple and Tesla when Tesla was under $200 and Apple was at $150. And if I would have just stuck with it, and a year later Tesla went up all the way up to $960, I would have been on top majorly. But I didn't go with my original gut feeling. Like when I was investing with my practice account, I went and tried going on some other roads where stocks were much cheaper, a lot higher risk. And then after taking so many losses, a little bit of losses, I went and invested in these blue chip stocks. And then after that, I seen massive gains. I came up, recovered, and was even $30,000 on top until this whole situation that we're now caught up in occurred. So don't change up your strategy. Either be short term, long term, or kind of middle, where 6 months, something like that. Don't doubt yourself. So when you make a decision, don't sit there and start doubting what your decision was. Again, it comes back to your emotions. Once you make a choice, stick with it. Lack of research. If you're going to go, and unless you're going to do the day trading or you're going to go based off of patterns, you're going to want to do your research on the company. You're going to want to see how high their market cap is, how many people are investing in this. Watch the experts. I really suggest watching the experts because that's what I do, and they're rich for a reason. They've come out on top for a reason, and they know where to put their money. They watch this all the time. Make sure you do your research on which expert you choose to follow, and also do your own research. Just don't go just off of their opinion. Do your own research. Really kind of, if you really believe in the product, this is how I feel, and you really believe in the business, and you feel like you wish you would have invented that business, well, that's normally a good feeling. Not always. Still do your research, but sometimes I've used this as an example in the past. I wish I would have came up with Google, or I wish I would have came up with Apple. Well, if you believe in it so much, do your research, see how much money they have in the bank, see their revenue, watch those quarterly statements, and really just kind of do your own kind of, go based off your own opinion. So last, calculations. Don't go and start calculating all the numbers and the money that you could have possibly made. So that comes back to your emotions. So there's times where I bought into a stock and then I missed out when I was trying to day trade. I missed out on its high point, and then after that I still made a profit, but then I started calculating all the money I could have made, and then after that you start going back into those old habits of emotions, and you start buying and selling, trying to return to that same amount of profit that you had calculated. So you want to try to avoid that, and you at the same time you want to avoid calculating your loss, because then you're trying to recover the money you lost. Take it as the day comes. You're going to have highs and lows in the market, but if you invested in a good company and you believe in inflation, then you know the economy is always going up along with this business, and businesses are meant to grow. So if you did your research and you're invested in a company that you know is going to grow, stick with it for the long term, and that's pretty much how I'm going about it nowadays. So hopefully this was helpful. If you guys have any expertise on this, or you guys want to give maybe an opinion on some other things to avoid when investing in the stock market, leave it in the comments below. And until next time, always try to reach that next level of success. See you guys next video.